welcome back to the show. It's 6:33 this morning as we kind of get things underway. Futures are pointing lower this morning, just a little bit. Dow futures are down about 56 points this morning. S&P futures are down about 6. Those have recovered a bit from this morning. Actually, late last night, futures were down about 15, 18 points. Those have been kind of slowly recovering. We wrote about in this weekend's newsletter to expect a bounce this week. Because markets are very oversold on a short-term basis. And as I was saying in the first segment of the show, you kind of, look to use this rally to kind of rebalance risk. If you haven't liked the sell-off in the recent highs, if you didn't like the sell-off last December, that simply means you've got too much risk in your portfolio, right? So if the thing about managing money and being invested is that you shouldn't be worrying about it. Your positioning should be set up so that your volatility in the portfolio, how much it moves up and down on a regular basis, isn't chasing you out of what you're doing, right? The whole goal of managing money long term is to have a discipline and an ability to stay with that discipline, right? A good discipline will work. You're not always going to make money with it. Things don't always go up. I know it seems that way at times, but they don't. But the goal is that if you can survive the drawdowns to a reasonable degree, then the gains will take care of themselves over time. The problem is we wind up taking on way too much risk, particularly at kind of the tail end of a cycle. We get into this attitude that, things can't go wrong. We can't. Markets can't go down. They just go up every year. I got to get my money in. Those are typically the points in time where the risk really starts to outweigh the reward, and that's where we've been now. In January of 18, I was writing articles about the fact that the markets had reached kind of the end of a cycle. And in fact, of March of 2018, I wrote an article, 10 reasons the bull market is over. And basically we've gone nowhere in 18 months. So now there's a couple of good things about that you can say, is that markets have to consolidate returns over time. So when you have a big run up in the markets, you normally have a fairly big contraction in the market that works off those previous excesses, the dot-com crash, 2001 and 2, the subprime crisis in 2008. All those were resets to kind of cleanse the system of a lot of the excess debt and leverage that had built up into the markets. Well, another way to work that off is a long kind of grinding sideways action, which is kind of what's been happening now for 18 months. I'm not saying that it's over, but it is possible. Now, it's never happened before in history, mind you, that you worked off a 300% advance by just going sideways for a couple of years, and then you took off to the next bull market. But it's always possible. The goal is for what the markets need to do is work off those excesses, work off those extensions. We haven't done that yet, right? There's still more to go. But it is possible. It could take another 18 to 24 months of kind of the sideways grind, and theoretically, you could kind of work off those excesses without having a major bear market. Now, the end result is the same, right? You kind of wind up not making any money for 3 or 4 years, minor losses, et cetera, kind of stack them up. We had interviewed Miss Shedlock on one of our podcasts. If you go to our podcast page, if you go to our website, realinvestmentadvice.com, click on our YouTube tab, you can get over to our YouTube page where we have all of our interviews. And we did an interview with Miss Shedlock, I guess a couple of months ago now, where we were talking about one of the possibilities over the next decade is rather than having a big bear market where you have a 30, 40, 50% loss, what about a decade where you have negative returns every year, but it's just kind of this slow bleed, right? It's just negative 3%, negative 2%, positive 1 or 2, then negative 3 or 4. And you just kind of grind through this thing over a decade or longer to work off those excesses. There's a possibility of that, right? 2 things will happen. Actually, 3 things will happen. One, you will wind up reducing valuations over time. Primarily what will happen is that you will discourage people from investing because people will begin, the market doesn't go anywhere. It just goes, kind of does nothing. It just kind of bleeds off every year. I'm going to put my money into money market. That's the same effect as a bear market, right? That's what happens during bear markets. But that's how you, again, as we were talking about earlier, we have to go through these cycles. And one of the kind of the late stages of a market cycle, an economic cycle, et cetera, is when you start seeing things, people talking about Goldilocks economy. This was big during the Bernanke tenure as Fed chairman. And he was talking about, oh, don't worry about subprime. It's completely contained. It's a Goldilocks economy, right? It's not too hot, not too cold, just kind of just goes along. Of course, that was in 2007. We know what happened next year. And we're seeing a lot of that same type of commentary today, right? Oh, don't worry about tariffs. It's a Goldilocks economy. Not too hot, not too cold, just kind of going along. We're going to make 2-3% a year growth on GDP for the next decade. No planning for what happens if. You know, the one thing that we don't talk about a lot in the media, anyway, we talk about it here, and it has been virtually non-existent as of late because the headlines in the media have been dominated by the Mueller report, by the China trade issue, now by Mexico. But we haven't talked about the deficit in a while. You know, we're pushing a $1 trillion deficit. We're going to be looking at pushing a $2 trillion deficit over the course of the next 2 years. And, of course, we're continuing to issue more and more debt. So the bigger that deficit gets, the more debt we have to issue to cover those deficits. But we're about to run into the end of the fiscal year. So remember that the fiscal year for the government runs October the 1st through September the 30th. We're in June. It will be September before you blink. And we're going to be talking about the debt ceiling. We're talking about a continuing resolution because all the stuff that we did last year to fund the government through the current cycle is all coming to an end starting in August. And so starting in August and September, you're going to start seeing a lot of talk about a continuing resolution. You know, just don't even email me about a budget. We don't do budgets anymore. We quit doing budgets in 2009. You know, the same reason that husbands and wives are all across this country are in financial debt up to their eyeballs is because they don't budget. They don't do a budget. Why do they not do a budget? Because a budget's a 4-letter word, right? Nobody likes to budget. So we just quit doing budgets. We don't budget anymore. We do continuing resolutions. We don't need no stinking resolutions. We don't need no stinking budgets. You know, that movie, Blazing Saddles. Oh, man. You can't play that movie on television anymore.
Can you imagine what would happen if the network tried to do that one live like they did All in the Family a couple of weeks ago?
Yep.
Heads would explode.
Yeah. Just... If you've never watched Blazing Saddles, if you can find a copy of it, you should watch it.
And if you can't call me, I've got one I'll loan you.
Yeah, exactly.
It's just
but
the best.
you will never see that movie play anywhere ever again because it violates every...
Or if you do, it'll be 5 minutes long.
Yeah, because it violates all of these stereotypes that we have today. I mean, millennials would be shocked.
And that's why it's so brilliant.
I know it is.
You know?
It offends it's an equal opportunity offender. It offends everybody. Just goes to show our age. Anyway, I don't know how we got off on that.
Some 20-something person's driving along. Blazing what?
Exactly. Blazing Saddles. Just 2 words. All you need to know. You will be offended. Let me assure you. It needs to. It'll come. It's be like the Warner Brothers cartoons now. You know, we have these. Oh, yeah. You know, the Warner Brothers cartoons. If you buy a DVD, or order them now, they all come with a disclaimer.
Parental warning.
A parental warning on Warner Brothers cartoons about potentially racial overtones
and violence.
Right? Because you know you hit people with hammers and pans and throw rocks on them. Anvils. You know what's always amazed me is that they always had an anvil handy.
Yeah.
When was the last time you saw an anvil anywhere?
From Acme.
Exactly. Anyway, Blazing Saddles, all you need to know. But anyway, the point here is that, you know, plan for these things. And we were talking about this earlier about planning for the worst. But, you know, if you take a look at what's happening, you know, there's clear evidence that we're closer to the end of the cycle than not. All right, quick break. We'll come back, wrap up the show this morning. Dow futures are down Again, concerns about China blaming the U.S. for the trade war, Google being under pressure this morning. So we're going to see some impact early. But again, as I was saying, expect a rally here. But if you're not really haven't been too keen on the recent sell-off, this is going to be the rally. This is not a rally to new highs. The bull market is not coming back. We are at risk of lower lows in the market, but nothing goes straight down. So look for this rally here to rebalance some risk. If you need some help, get by the website, realinvestmentadvice.com. Send us an email. Always happy to help you. We do it every single day. And we're about to issue out our 401k plan manager, which is in our newsletter, is about to go live. So we need your help. If you have a 401k plan, have your choices. If you go to our website, realinvestmentadvice.com, and email me your choices in your plan, tell me what plan, what company you work for, what plan sponsor you have, give me your choices. We're going to actually build a live version of your 401k plan for you and attach it to our model manager. So it's on the website at riapro.net, but send us an email from realinvestmentadvice.com and we'll get you set up. Don't go away.
Clean shirt, new shoes, and I don't know where I'm going to. Silk suit, black tie, and I don't need a reason why. They come running just as fast as they can, 'cause every girl crazy about a sharp-dressed man.
Catch Lance Roberts' podcast later at lancerobertsshow.com.